Welcome back at CryptoFly channel. Today we'd like to share with you the strategy, the classic strategy, how to trade a downtrend lines, how to build the entries on that downtrend lines or the uptrend lines, how to trade the channels, where to open trades, where to add a stop loss. Let's dive in. Guys, I will be honest, of course I can make just a basic standard video, like from the books, this is a trend line, you open trade here, you do this, you do that, you become the millionaire, guys. But I don't like that type of content. That's why I will share and add some notes from my personal experience, because you have to be realistic with the trades. If it helps you to make money, it's good, right? So they work personally for you. But in most cases, all of them we can identify after the facts, or we have to use kind of two big stop losses because everything totally subjective. Depends of time frames. We can identify absolutely totally different levels for downtrend or uptrend moves, right? And I already explained to you in a video about the channels. So all channels we can draw in totally different ways. So when you look at that chart, a lot of people can draw the uptrend channel from this starting point to this one. This is going to be the top, right? So technically we're going an upside. Somebody can just start drawing the downtrend channel. So this is a top, this is like a bottom, and we're going down. This is why there is a lot of variation how we can identify their patterns and how we can work with the tools. But anyway, here's a strategy. For example, we got this 12-hour time frame formation candles on the chart. Based on these rules, based on the classic TA, we have to open trade after breaking out of this, just I remind you, hypothetical downtrend line. Why I draw this line like this one? Because I use the line chart. So I can draw like this one. You cut all noise and you can draw the trend line based on line chart, for example, or adjust that candle charts. Wait the breaking out of that downtrend line and on retest or exactly after the first candle close, open trade. Globally, it's like a sounds good strategy. But technically, I never trade this move because all of that trend line is totally subjective. We can't know this is exactly the trend line. Right, because maybe the next rejection will be here. For example, just hypothetical, around here. So this was a first touch, second one, and maybe you're gonna be here. And we open trade and then wrecked again. Be careful with all that classic TA patterns. For me, of course, I always trade the time and I always trade the liquidity pools. I rather open some trade on that sweep. When we sweep that low, yes, I could open trade, potential open trade if I could see the setup of that move. So it can be like that move, less than 5% stop loss, and the next step will be sweep of that liquidity pool. Technically, of course, we can form the triangle like this one, so and wait this pattern or wait something like this one, because they see here's the triangles. Someone can trade the channels, and about the channels and the trend lines we'll talk in this video. We got 1, 2, 3, 4 touches. The more touches, the more legit this trend line. It's information from the books because it means we can't breaking out some significant price level, and we at this level met the sellers. Sounds logic, right? We retest it. All right, be ready. Next candle. So this candle breaking out. By this strategy, you have to open trade on the next candle and add stop loss under this candle, which breaking out the trend line, or under this one, which closed candle. Here is. We got an entry. All right, so let's open the trade. Here the candle close, we open trade, and our stop loss, if we add a stop loss under this candle, right? So we not sweep it, right? This, and I remind you, this 12-hour time frame. This one, stop loss 2%. Got it. Based on that strategy, everything looks good. Let's move on. Not hit, stop loss not hit. Or you can add a stop loss on this one. It's going to be 5% stop loss. 6% up. We move forward. 10% up. And going down. So, of course, where to fix profit, it's only up to you. There's absolutely open space. There's only liquidity pools, right? That's why it's all about your greed and your strategy. If you see that trade like 10% with 10x leverage, it's going to be 100% profit. So it's good trade. Because take a look what had happened next. Drop it down and hit our stop loss. If we add stop loss under this candle, we can be safe. But not 100%. And we move forward. That's why it always depends of your risk management. If you're okay with 2% or 3% stop loss, you can trade it. If you're okay with 5%, it's maybe depends of risk management and the leverages. Also, sometimes we can trade the same model, on a smaller time frame, for example, to increase our win rate. So let's say this is a breaking out of trend line. Let's go back with a reply bar, but let's go to 1 hour time frame with tiny stop loss. Here we're breaking out, and technically we can open trade on the next candle, this one, and stop loss around here. But this is not 100% safe, right? Mostly the people also take trades when we're breaking out the trend line and retest it. So we got a 2 option: open trade immediately after we get a first candle close after breaking out, or wait the retest. But of course, on 12 time frame, you saw we didn't retest it, that downtrend line. Here on retest, we could open trade, stop loss on the previous candle. Yes, so we increase our win rate because now our stop loss like 0.29. But all right, we can adjust it and make it like let's say 1%. So previously we got a stop loss like 3% or 5%. Now we got a stop loss like 1%. Let's take a look what happened next. And we're going higher, 6%. We move forwards. This is a 9, and this is a 11, even higher. So at the top, we could fix 13. And yes, we're going down. But of course, guys, it always depends on your trading style. If you're comfortable trade on 12 time frame with the confirmations, you can trade on 12 time frame. If you want to increase your win rate, you have to build your entry on smaller time frame. And this was a great example. Absolutely the same story, the same strategy with the channels. So here we use the channel. Let's use this one like starting point. The second one, adjust it like this one. For example, this was a support, bounce, equilibrium, rejection, equilibrium, and we have to open trade when we're breaking out the channel, retest it, and going higher. So absolutely the same story on 12 time frame. Let's go to 4 hour time frame, for example, to increase our win rate. Here is a first touch. We not confirm it. Here's a candle going out of that channel, retest it. And technically, we could open the trade, this one, stop loss under this candle, 2.5%, and we move forward. Stop loss not reach it, right? And we're going higher. And of course, you can add stop loss under this candle or under previous one, so like we talked previously. Or you can wait the retest. The model and the logic absolutely the same. So we got a support, bounce, support, support. Here's a fake out, like always traders call it. Here's a support, bounce, support, bounce, and here we could open trade on the first candle, which breaking out. We open trade, stop loss over than this one, 3.7% stop loss. And it was a perfect trade, like 37%. Amazing trade. Where to fix profit? Absolutely up to you. Up to your own risk management, up to your size of position, up to your logic, the context that day, because now it's easy to show you the perfect trade like 37% short position. In the moment, while you don't know exactly where we go, mostly you can fix the profit 1 to 3. Here's a 10%. Perfect trade. Perfect trade 1 to 3. You could fix here. So around 11%. Logic, of course, for fixation, absolutely individual, right? Mostly it's first problem zone. First problem zone where we can find out the reaction back. When, for example, you fix some profit, you can just drop it down and add your stop loss at break even. This is also the good strategy. And just write down, if you want it, to the next liquidity pool. The next liquidity pool was here. So basically it was a good logic. But of course, guys, we analyze now after the fact. But in the moment, we don't know where is here. What will be next? So it's easy to analyze because we know it, what happened. But in August, we don't know. We don't know the news. We don't know the reaction of the market on some posts or so. Globally, we got that liquidity pool, this one, and the global one, this one. And technically, of course, it's playing out amazing. Amazing trade, 37% here. We dump it even under this one. So that's it. The price, drop it down to the first problem area. You can fix a 50%, add a stop loss to the break even, and just write to main target. So this is it. Also, guys, absolutely the same story with the channel. We should open trade when we're breaking out, retest, with retest or without retest, and stop loss the candle which breaking out the channel. All right, so let's move on. Here's the reaction at the equilibrium. Bam. We're breaking out, support a line of this channel. Here, we sweep that liquidity pool. We're breaking out. We open short here, the stop loss over this candle, 2.54% stop loss, and we move forward. Bam. So this is a logic, guys. The problems with that strategy, it's hard to identify correct trend line, first of all, because all of that trend lines, it's absolutely individual. So take a look. We can draw the trend line like this one, right? Support, support, support. Support, breaking out, drop, but we come back again. All right. Somebody can draw that trend line like this one. Somebody can draw the trend line from this point, like this one. And you should open trade here. The logic, I already explained to you. I recommend you to trade this strategy on your personal time frame, what is comfortable personally for you, and use it like a backtest to identify the comfortable asset for that one, because I guess on different assets it's playing out totally different, because sometimes we get the asset with a huge weak candle always will be racked with the stop losses. And also work with proper risk management and with own risk management, because there is not a magic. So someone can afford to lose I don't know, maybe 10%. Someone can afford to lose only 1%. If you can't afford big percentage, you need to just reduce your leverage. So pretty simple. So guys, I hope you like this video. Subscribe channel, hit the like button, hit the notification button. Don't forget, join my Telegram channel. See you next time, guys.